Good morning, this is David Hunt. Just doing a solo speed webinar from some leftover questions that I had from the Spotee Ticker TV show yesterday with Elio and Tony that we didn't get to. I thought I'd do the charting ones and add it into the Profit Hunters solo speed webinar. So I'm starting with the ASX first, and then later I'll send across the we'll go into doing an update on the cryptocurrencies, the commodities, the forex, and the world indices as we saw it overnight. So welcome to the ASX solo speed webinar for today, which is the 26th of May 2020, with me, David Hunt, profithunters.com.au. Here's our disclaimer and warning, and this is general advice only by Desk Trading Proprietary Limited, corporate authorised representative 289519 of Alpha Securities, AFSL 330757, Suite 301, 10 Bridge Street. General advice. This is general advice, does not constitute financial product advice, and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice, you should obtain and consider the FSG and consider the product disclosure statement issued by and available from Alpha Securities or profithunters.com.au up on the disclaimer and warning thing, or legals. These are my views. They may be right, they may be wrong. Sometimes I'm right, sometimes I'm wrong. Use a stop loss. That helps when I'm wrong. It helps when the market changes and weird things happen. So can't guarantee any outcomes for you, but here we go. We have short-term bear pause warnings on AMC, AMP, CCL, GPT, James Hardie, Newcrest, News Corp, Origin Energy, Santos, Tabcorp Holdings, which I covered yesterday at Spotee, and Wesfarmers and Woodside Petroleum. We have no short-term bullhorns warnings. We have wedgies in the FANGs, the Beta Shares Crude Oil Index. We'll cover more of these during the week, tomorrow particularly on the webinar. IAF, the iShares Composite Bond, BBUS, the US Equity Strong Bear Fund, ATEC, which is Beta Shares Australian Technology Index, ETF, the GDX, Gold Miners, VanEck, Australian Properties, BBOZ, which is Australian Strong Bear, Aristocrat Leisure, Gold Miners on Beta Shares, Unibel, the old Westfield, AMA, NASDAQ, NDQ, Elio mentioned that yesterday, the Beta Shares NASDAQ 100 ETF, CNU, China New Economy, and United Malt Group. I've not looked at that chart before. Boral and Vanguard. We had a question from a PHG subscriber this morning. He mentions that the S&P 500 index, this is in the cash CFD market because the S&P didn't trade last night, I believe. Reached your targets at 29.94. There's some good timing coming in today. He thinks we may be close to a top at the moment. So let's go have a quick look at what should have been trading last night in the US equities, and to see. I'll check the S&P cash to see if it was open. No, it wasn't. This is Friday's data still. So we'll look at the E-mini S&P and NASDAQ futures. The high was 29.90 in the E-mini S&P. Now I've had a target at 3,008, and that generally should be the driver. I was mentioning yesterday that the markets tend to go up into US holidays, and then we see what really is what. Yes, I agree with that. We're still there, and yeah, probably the CFDs tagged 29.94 yesterday. So still working to plan. Let's look at the internals. The internals, the E-mini. We won't be having the floor session E-mini floor session, a big gap up, and the way they're manipulating is that they do want to see it rallying into the rest of for the rest of the day. Today they want to get Asia long and wrong. So watch those levels today, tonight into Europe. Hopefully they'll get the liquidity they want to sell into and manipulate the market better. Okay, so next thing. This is Ryan specifically for me. This Ilio sending me that message. A question for David. The Dow has been range bound for the past 5 to 6 weeks and trading between the 50-day moving average and the 200-day moving average for over 3 weeks. I read that historically it doesn't happen very often and was resulted in a move. I don't know whether... historically the Dow has been pretty trendy, so depends on what time frame you're looking back on. If you're looking back in the some of the 80s, you'll find that it really didn't want to spend any time range bound. It was trending a lot. If you look back into 70s, there were some range bound periods, definitely. Let's have a look at let's test that statement. And I have a confession. I don't use the 50-day and the 200-day moving averages at all. That is for people who are, I guess, more bog standard technical analysts, or people who are want to be technical analysts. I guess there's far better tools out there. So the question here is, has it spent much time in this? Is this true? The answer is it spent time over here for about a month, and so far it's spent about nearly a month now in that period, the blue line being the 50 period. So we can see here the 200 period sitting above that at the 26,312 and currently down at 22,919. We were fortunate enough to have a very big short on this decline in the US equities markets too, very big in the S&Ps and the S&P E-minis and the NASDAQ E-minis, very big trades. Now usually after such a big decline the market does track sideways. So yes, about a month has happened over here. Let's go have a look and see what also happened each time. Notice here when it's trending it stays well above the 50 period and way above the 200 period moving average. And here again, that's about a month in that little vein, that little same area. And this is 2003. 2003 of course was coming out of was part of the earlier start of the big bull run that ran into 2007. Back here in the 80s, we have 1987 period here, and it was also an extremely good move up there. I didn't choose. This is where we landed. You can see that even during that crash, market had actually topped in August, and even that during the crash, it spent not quite a full month in the bars because it popped its head out a few times, but those moving averages were, I guess, somewhat useful in showing that it might go down. So your premise about that certainly worked for 1987. Having come back here, this is 98, June 1998. Spent about a month underneath here, give or take a few days. So yeah, that's a good observation over here, and see, here's probably the thing I'd prefer to research, not right on here, but I haven't got the time for that. But notice the configuration here: the 50 period above the 200 period, the 50 period above the 200 period. In this time, it went up. In this time it went down. So both same configuration of moving averages. In this period here it was about 3 weeks, I guess, 2-3 weeks. The 50 was below the 200. So you might want to research that when people are making those statements. Down here, yep, certainly. Now the difference is what we're seeing over here right now is the 50 period is below the 200 period. So let's go have a look back into some other history. This is back to 1938. So when you say I've read this historically, doesn't happen very often, and we need for it to be valid 30 instances of this, or actually my son, who's a data scientist, says it's like 26 or 28 now, has resulted in a move lower 70% of the time and nearly always lower over the following 6 months. I go back to my forecast in this state, and my forecast that was done, I've been forecasting for an economic peak and a peak in the economic activity in 2019, and that's pretty well what has occurred, and then a steep drop off with economic activity. In terms of the stock market, yes, we predicted and traded off the peak in 17th of February 2020, went short the S&P above 3,073, I believe, from memory, and the Nasdaq at quite high levels as well. So yes, I believe in the current state of a bear market. This is counterbalanced by the Fed's buy everything at all costs and profit certain sectors of the financial community, which I find abhorrent, but that's the way the system works, unfortunately, these days. But what we're seeing is, I agree with the scenario that it probably has another leg lower. The question is, how long can anyone fight the Fed? And if the Fed is prepared to spend any money, it can. To me, it's lunacy, but I believe that we should be seeing companies go to the wall. We should have seen that in 2009 and 2010 and 11 and 12. There should have been more failures for companies, because a lot of companies just rely on debt and crazy ideas for their own businesses, and then sometimes at some stage they have to pay the piper. I think the stats used to be that 80% of businesses went broke by after starting 5 years after starting. We haven't seen that lately. All these startups that we saw over the last really 8 years with crazy ideas haven't been punished. At the moment, I suspect they are being punished a bit, but we haven't seen the washout of that. So anything could happen. Yeah, and further to that, usually we expect a couple of shoes to drop. The first leg down is generally the biggest. If you look at my forecast, we have some timings specifically. I do a forecast every 2 weeks and a strategy update for my members, and that has been consistent for the past 6 months really, that we were looking for another leg down, and there's a specific timing that we're coming up to in the next 3-4 months that we will expect. Maybe not a new low now because of the Federal Reserve's actions, but a potential another 8%, up to 8% lower than the previous low in the US equities market. So I hope that answers your question. If not, give me an email at david@profithunters.com.au. So here's an email from Tobias. What are Tony and David's thoughts on the growing political sovereignty risks that face ASX-listed material energy companies producing LNG, aluminium, South 32? Okay, let's talk about South 32, and then we'll do AWC, which has been a very high dividend-paying stock. Now, South 32 was the spin-off from BHP, and nobody loved it. I called it South 32 for a reason. I said, I think at Your Money or Call at the time, I said, well, it's going south. That's embedded into the number. Luckily, I spotted that it was turning around basically February, if I remember correctly. Yeah, it was February 2016. And I grabbed some for myself and told Profit Hunter Group members to get into it. So once all the BHP overhang it sold off, then South 32 was good. Now, South 32 is back to those regions where it was first born, and it's had a bit of a washout. At the moment, this is the monthly chart. I don't yet see anything that is, I don't yet see anything that is really stand out, hurry up and buy on the monthly charts. It's still in a confused state. It still could make $1.31 on the downside and an absolute screaming buy at 80 cents. You know, if we go into war with China, we're going to need all the resources that we need, that we want. All the words around trade wars, but my military friends are actually telling me that there is a strong fear in the military that they will be going to war, and they're watching what China is doing, building lots of tanks and things and armaments. Not just the paper mache displays they show in Tiananmen Square, which they have a bit of a laugh at. Anyway, this is in a triangle, which puts it up in a bit of a, this is on the weekly charts, which puts it on a little bit of a tight angle. A break above $2.10 for South 32 is good. A stop loss below $1.74 is needed if you are long South 32 at the moment. So it's not quite, it's got a pattern that could push lower on the weekly charts. What we see on the daily charts is a little bit of increasing volume over the past couple of days. If you turn that into, it's got 3 black crows at the moment, so I don't think I want to buy South 32. And at present, be very careful with this, particularly if it cracks $1.86, looking for $1.64 on the downside. AWC, alumina. We didn't mention that specific, but it is aluminium. Again here, projects lower down towards about $1. Now I don't know what it's done with its dividend policy, but used to be fairly high paying. We do notice that iron ore is being sent pretty well anything that China can take at the moment. Pig iron Twiggy Forest is very happy to send as much iron ore to China at very high prices. The rally in the iron ore prices is exceptional at the moment. So unless it really gets through $1.66, then it's in trouble. If it gets through $1.66, look for $1.87 or $1.82. That's what I feel about alumina. It's not the safest little puppy as well. It's one day behind doing what South 32 is doing. So yeah, there's a bit of risk there in the charts. Gold in other countries and other than Australia, should we also be factoring in the importance of negative and positive US dollar swap lines when assessing these companies and their operations? When you talk about US dollar swap lines, that used to be my business. You talk about currency swaps, I imagine, so that people can actually hedge their exposures, being able to sell gold and receive Aussie dollars back if they're, particularly if they're, and then manage their exposures overseas if they're producing gold overseas. I'm not exactly sure of the question. Negative and positive US dollar swap lines when assessing these companies and their operations. For a company that is producing, say, gold, as long as the gold can be produced and sold on the swaps, delivered on the swaps, and then they receive their Aussie dollars, then there's not much risk for that company. If they can't supply it, then they incur penalties of interest rates and possible defaults under the swaps. My role in a number of companies was to hedge interest rate swaps and some commodity swaps and commodities exposures using swaps, 3 years, 5 years. So I'm delving back into my memory here. But the best thing I can say is that's the real risk. Non-delivery is the biggest risk to those companies. And what you're saying is if we're getting a demarcation not being able to deliver, then that's a real problem. Can Australia deliver the gold? That's always a question, particularly now that our transport services are now really shut down. I can't remember hearing a plane for the last 2 weeks. I don't know about anybody else, and I'm certainly around the eastern suburbs of Sydney, and usually there's a plane going over every 5 minutes. So at the moment there are risks to those deliveries. If there's more war, then there will be the ability to deliver and to produce as a problem. So that is a risk. The other ones, I don't think there's risks by having US dollar swap lines. Now, finally, Jake from has asked about ZEL, which is Z Energy, and it's from New Zealand. Let's have a look at that one. Actually, there might be another question there too, but there may be another one. For the same reason, Z Energy has had capitulation, but usually after capitulation you expect a retest. Now you'll notice that it's trading lower than where it was born at. This is, for me, a bad sign. I don't particularly like that. Possibly it's because the Aussie dollar is getting stronger against the Kiwi. Last time I looked at the Aussie dollar versus the Kiwi was around about the 1.08 area. So let's have a look at that. So some of this may be valuation effects of the business. And here, so it's up at 1.0723 at the moment. Notice it went to parity where 1 Kiwi was worth 1 Aussie. Good on your Kiwis. I prefer skiing in New Zealand personally, although my knees don't anymore. But I remember certainly $1.38 from and $1.40 from years and years ago. There's $1.36 from the 2000s. Over here, this is $1.26. So generally, the Aussie Kiwi has been somewhere between $1.10 and $1.20 for a long time. The Kiwis have won because of the preference for the Chinese mainland investors and the rest of the world, in fact, wanting to live in New Zealand because they see it as a safer place. It's certainly a very productive place, but some of those earthquakes, I don't know about that. So Aussie Kiwi, Aussie strengthening here is the green bars. Aussie weakening is the red bar. So some of this effect that we're seeing may be a currency valuation. So I'd like to see this on a Kiwi chart. I'm not sure if it's listed on the Kiwi exchange, New Zealand exchange. We notice volume moving to the downside, so I don't want to touch this until it reaches a new low, and probably I'd say around about the $2.04 to $2 mark would be the trick for that one. Okay. Right now, I'll flick back and we'll have a look at some of the cryptocurrencies and our normal. So welcome to the cryptocurrency report for today, which is the 26th of May. It's the Solo Speed webinar 2020. Here's our disclaimer and warning. Remember, this is general advice only, and corporate authorised representative 289519 of Alpha Securities, Adesh Trading Proprietary Limited, and the AFSL for Alpha Securities is 330757. This is personal advice. This is not personal advice. Does not constitute financial product advice. Does take into account your investment objectives, financial situations, or particular needs, and it is general advice only. Sometimes I'll mention derivatives. At the moment, we're talking about cryptocurrencies, and I'm doing an abridged version of my normal report. Now, currently we are short Bitcoin from 9,858. We are looking to buy down at 7,490 with a stop loss at 6,700. Hitherto we had a very nice run up, and we were making some good money out of that. We made about, I think we got in around about that 6,000 level. Yes, it was around the 6,900 to 7,000 area. We got in that, and we got out, and we've not had any trades on, and then we put a short on at 98.58 back on about the 19th of May. This is the PHG trades table. 18th of May at 12:30 p.m. So we've seen none of these targets quite yet meet. We've only done a quarter because shorting Bitcoin is not the easiest thing in the world because it's been so volatile. Prefer to do small positions. And it's come down into this zone. It's 8,000. We were up about $1,000 per Bitcoin. I'm half inclined to take some profit here. If we had a bigger position on, I would take 1/3 off. At the moment we don't. Let's drop our stop down to 93.10 on our short position. Currently it's sitting at 95.56, and so we'll just drop that stop down. Now we will be looking for other trades in other cryptos shortly when the cycles permit. So this is looking at Bitcoin Gold, nothing really to think about. It's in slightly a positive stage, so I'm happy to drop the stop loss. Bitcoin Satoshi Vision version, a little bit more negative on this one. We also look at BCH, and I can't quite see, there it is, BCH USD. My table's changed a bit. BCH BTC. I'll worry about this table later, I won't bore you with it. At the moment we'll have a look at Ethereum, which is one of the other major currencies, and that's just a mess. So I'm happy not to be playing with these things. Some of these die out. Notice how some of them just disappear. That's one of the risks with these things. What I tend to do is encourage people to be more interested in the major ones than the little ones. So this is Monero, which is coming down into a bit of support. Yeah, we'll wait till tomorrow's speed webinar on 7 a.m. tomorrow. If you're interested in that, let me know. That in the crypto. So happy with that. Let's turn our eye to the Forex side of the business. So welcome to the Forex speed webinar, solo speed webinar for today, 26th of May. And we haven't got much on in the way of trades on Forex. Usually this is a doldrums period, and we try to, basically this time of year, we're just trying to keep either short-term trading to make some money, very short-term trading. Markets get more and more liquid at this time of year as we head into the Northern Hemisphere holidays, summer holidays. And I believe Greece has brought forward its summer holidays by a couple of weeks as well. So we try not to take as many trades, trade a little bit smaller this time of year. At the moment we have been long the Aussie dollar from, I'll just go through the PHG trades, from 64.47. A lot of hedgers use my work. This is for hedging their currency exposures. That's one of my backgrounds as well, managing currencies for large corporations such as Macquarie Bank, trading currencies for Macquarie Bank and Qantas and OSAT and Commonwealth Industrial Gases when it was in the day. Currently we have been long, and our stop was lifted at 64.98. Currently we can bring that stop up to 65.12. That's all we needed to do. 66.89, still a target up there. USD CHF, we are now short at 0.9661. A stop is at 0.9756. This hasn't looked good, this trade, since the time we took it, and bring that stop down to 49, and it's trading now at a little bit underwater by about 50 points. So let's bring that stop down. It was part of a bracket the market trade. Could have gone one way or the other, and it failed to go anywhere. Kiwi, we have been long since 18th of May at on 1/3 of the position. You'll notice the smaller positions usually, and at 0.5942. So let's see where the Kiwi is. Stock can move up 0.6045, so that's okay. That will bank just on 100 points on 1/3 of the position. The US dollar index, we have been stopped out for a 30 pip loss on the futures contract on June. That has not been taken off the list. That will be taken off the list tomorrow morning for Profit Hunter Group's speed webinar. So I won't change the process. That's a normal part of the process. Okay, let's move on. Okay, welcome to the Commodities Solo Speed webinar for Tuesday the 26th of May 2020. Here's the disclaimer and warning. I've read it enough, I believe. We have long-term bear pause warnings in coffee, rough rice, soybeans. We have short-term bear pause warnings in crude oil, cotton, feeder cattle, heating oil, orange juice, lumber, platinum, silver, RBOB gasoline and oats. And we have long-term bullhorns warnings in corn, cotton, lumber, palladium. And we were looking for, we got trades away in platinum and palladium. I think hopefully we're still in platinum. And short-term bullhorns warnings in Kansas wheat. Now what I want to do is to just do the PHG trades and cover those. I don't want to bore you with all of the things that we've got on. Might have a quick look at gold and some bonds. Crude oil, we went long on the 29th of April. We went long at $13.35 for 1/2. We've taken 1/3 profit on the 8th at $23.35. Locking in $10, which was quite a good profit there. Now we've moved it out to the July contract. We were in the June contract, so we see, sorry, Q is the August contract, I beg your pardon. $28.80 is the stop loss currently for crude oil. So we're still cooking with a bit of gas here. I think let's leave the stop loss as is. I mean, we might be looking around about $42 for this. So we'll see how long we can press it for. Heating oil, we went long on the 29th of April at 0.6333. Stop is currently at 0.9685. Might just have a look at how much that is per contract. This is a heating oil contract, and there we go. Yeah. So the profit now is per contract with adjustments. Looking at, and this is called counting the chickens. It is a big, probably. There we go. That's currently $13,511 US per contract. So over 20,000 Aussie dollars and about a 47% return, which has been pleasing. Let's pick up here on the similar basis the crude oil trade we put on and got in down here at $13. So that's 20,000 US, so say about over $33,000 Australian, about 149% return on that, so not bad. We don't get trades like this every day, but certainly they're pleasing to the eye. We're currently long gold. We were looking to buy soybeans. Let's do that. I advise a number of grain traders and grain companies in their hedging and their trading. So we're still looking for $8.05 on the downside at the moment. Nothing is changing that view. Let's have a squeeze at gold. We'll leave that order in there. And gold still hanging around. It hasn't taken us out yet. Nearly has. 1708, got close. We've been long platinum. We got about $80. Let's call it $80 of $63. Yeah, call it $63 out of that. Platinum, that's it. We're not in that anymore. Silver, we're long from as low as $15.03. Probably average is about $15.20. Stop is at $16.85. Let's see where we can put this. Silver is behaving well, looking for 1922 on the top side. I don't want to bring that stop loss in closer. Cotton, we're looking to buy some cotton down towards 55.80. We'll wait there. Coffee, when no position on there. Sugar, we're long. Stop is at 10.50. We're long from 10.20, 10.42, $10.42. It is trying to stop us out, but we're still in there looking for 11.77 on the top side. Orange juice, we've been long since 105.8 and 103.2. So the average, let's call it 104 something or other. Stop is currently at 120. It's been a pretty miraculous trade. Well, it's been a gift from heaven, actually. And we're in from down here, so 104. Take it from there. So current profit. And when I start counting the chickens, we start to think maybe we should be banking some cash. That's 3,400 US, about 21%. It's not as big as I had in my mind, but the orange juice is a bit of a smaller contract. Remember, these are futures, not CFDs. 118 is better stop, but we could do 122 now. Let's do 122.1. Okay, haven't achieved 136 yet. Not quite, still looking for 136. That's it for the commodities. One thing, we'll have a quick check on the Chinese iron ore price, which has been driving itself very well. A little bit there. The other thing I do want to look at is Baltic Dry Index. We think that's a double bottom. We do see shipping costs come down to be equal to the low in February, and really around the lows that have been for many years, like many years lows. Notice here, this is 2016, it was 332, so it's in that 400 area. Over here is that 600 area, 647 lows. So historic, pretty well historic lows. So the Baltic Dry Index is cheap. So we have been looking for BDRY. I'll do that before we go into the equities. We've been looking to buy dips and not quite getting that, but that's something to have a look at. The ETF Managers Group Commodity Breakwave Dry Bulk Shipping ETF for the more risk-oriented traders. World Indices, 26th of May 2020. We did a little bit on the S&P and the Dow previously, but there's no real change from yesterday for a lot of the US markets, aside from the information on the E-minis, the NASDAQ and the whatnot. We have short-term bear pause warnings in 1,226 US OX stocks, including Apple, and also short-term bear pause warnings on the Topics and Nikkei. We have short-term bull horns warnings on 11 OEX stocks, including Gilead Sciences, one of the companies that tried to give us a bit more of a life with, give us a little bit more life with COVID virus vaccines. Luckin Coffee, which is a disastrous Chinese company that was issued at the height of the boom, floated at the height of the boom, and E-mini S&P long-term bull horns warnings, S&P index long-term bull horns warnings, and E-mini Dow, mini Dows long-term bull horns warnings. There's something to think about. We don't normally see these appearing. Last week we had short-term bear pause warnings in the very same indexes. We have had a look at the Dow. At the moment we'll have a look at how the DAX went. We've been looking for 11,679 in the DAX. That's still on course. We'll probably see that tonight. Then we have to make some decisions. The Euro Stoxx 50, we are working its way higher. So it's not as strong as the German DAX. Normally it takes a bit more, it lasts a bit longer. It carries through after the German DAX has peaked. The Italian MIB has been going flatlining, and it's still within that range. It really hasn't had much fun. Eventually, I think 18,480 for the Italian MIB. And that may come at the end. The UK FTSE is kind of, I think it was a holiday in the UK, so there's no new information on that. And look at the volatility index. No trading in the volatility index. Hoping to buy some around the 25 area. I think next few days are going to be extremely interesting. The Shanghai, let's move across to Asia. The Shanghai A shares index has been pounded a fair bit on increasing volume, so I'm thinking around about the 2900 area for the Shanghai A shares index. The Hong Kong Hang Seng. Now, I'm not giving you specific stop losses on these. Generally, if somebody's putting a trade on, I'll tell them that. That's where the stop to be. Hang Seng has probably done enough on the downside. A bit of fear and loathing and a bit of protesting. Should bring it up to about 23,400 now, I think, when things calm down. The Australian Share Price Index Futures. This is the June contract. I think yesterday I was talking about 56.80. It's arrived there on the Australian market. We're probably up today across the board in the market itself. Peeled off a bit. Peeled off after the open. Yeah, okay, it's interesting. Bit of volume to the downside. Probably you'll see it around about the 56.20, provide some support. Getting below 5600 is dangerous for the ASX. Let's see what the ASX 200 has done. Yeah, its danger zone is below 5500 for the ASX 200. Thank you, guys. Have a great day. Be careful out there. It's more volatile than we think. Just parting thought is, yesterday a lot of businesses received $10,000 over the last little while, depending on when they do their tax. I wonder how much of that ends up in the hands of, or the last couple of days, hands of the stock market, because that was a free cash flow boost that no one has to give back. I questioned my accountant about 7 times, and he said, no, you don't have to give it back. I was like, really? Seriously? This is from the government? Strange. Anyway, all the best. I'm David Hunt from profithunters.com.au, and have some fun out there today.